Welcome everybody to the ARMR Report. This is a special, what I call pop-up live stream. You may not be able to watch this while I'm doing it. That's okay, you guys are busy, I get it. But this has been on my mind and I want to share some thoughts with you, more from a psychological standpoint. Things we don't normally talk about on the show, or discussions that I have, and for beginners, I might be moving real fast for you. So this is an opportunity for me to talk to beginners directly, people who are investing in the equity markets, in the stock market, and want to try to understand more what it is I talk about Monday, Wednesday, Friday from 11:30 to 12. So what I'm going to tackle today is the use of stop losses and how to execute correctly. Because I think protecting capital is more important than actually increasing your net worth. That you start, and I shouldn't say that. Nothing's more important than increasing your net worth. But protecting capital is the first step to getting there. That's what I'm trying to say. So the ARMR Report, as you all know, stands for Algorithmic Risk Management Research. Okay? This is a live trading desk. You're getting a live look in. It's 3:25. I'm going to have to, be busy in the last half hour. So I'm going to keep this brief. I'm not going to be recommending stocks today. I don't ever do that on this show, right? Because I don't know you. I just share with you my information, my knowledge from 30 plus years of doing this. And this particular discussion is geared towards beginners and geared towards anybody who wants to improve their success ratio of increasing their net worth while protecting their capital. And so what I want to address is where stop losses fit into a strategy. And what I want to say is this. This is the most important point I wanted to pass on to you. And it bothered me to such a degree that I felt I should do a pop-up and just share it right now. Stocks are not your friend. Companies are not your friend. These are investments to increase your net worth. You don't fall in love with them. You don't walk around talking about them all the time saying this has to work. In your mind thinking it has to work. None of it has to work. Okay? Let's be clear. None of these stocks are your friends. These are just assets that you're putting into your portfolio. Okay, this isn't monopoly. This is real money. These are assets you're putting into your portfolio that you expect to increase over time, build your net worth. When you put these positions on, you have to understand that you're going to take losses on some of them. It's just natural. It's nature. It's how the stock market works. You're not going to be right on every entry. And the faster you understand that, and the faster you identify your losers, the better your net worth will build over time. The single biggest issue I have when I start a new relationship with somebody, right? And I manage money for individuals through our interactive brokers relationship. One of the biggest issues is particularly a beginner gives me assets, says, please manage this. And we go over the process. And I highlight how stop losses must be used all the time, which is kind of hard to deal with because on the one hand, I'm going to tell you how excited I am about a particular stock or an investment theme or a dividend payout yield that I think is great. Okay? But the reason I'm doing this pop-up right now, I'm talking to you guys who watch this ARMR Report Monday, Wednesday, Friday as well, not just the beginners. I don't care how much I like an idea. When I put a new position on, I always have a stop. If it goes down, I go back to the sidelines and I reassess. Sometimes I miss something, hits my stop and skyrockets. I don't care, guys. This isn't about my ego. It's not about being right. It's just about making money and protecting money. That's the game. Protect your capital, capture upside when you can. Stop loss disciplines are key to that strategy. So if you've been, well, let me just wrap up by saying this, particularly if you're a new investor, please understand that every investment you take is not going to make you money. And don't fall in love. That's what I wanted to say to you today. Okay? Protect yourself. You can always come back into that stock or that investment theme. It's okay. You might be buying it 50% cheaper like we're going to be in the cannabis stocks, or you might have to pay a little more for it because you got shaken out. It doesn't matter. This isn't an ego thing. This is about risk versus reward, probability versus and statistics, getting them on your side. But then recognizing, okay, these trades aren't working. These investments aren't. I don't care. This is a long-term investment, Brett. I hear that all the time. Okay, I got long-term investments too, and I want them to be going up over time, right? I don't want to be buried in my long-term investment and then it becomes a long-term investment. How many times have you guys heard that? How many times has that happened to you? You start off excited, it's an investment, and then a month later, down 25, 30%, and you start telling people, well, this is a long-term investment. You're lying to yourself, guys. Okay? I'm doing this pop-up right now to wake you up a bit. Don't lie to yourself. Okay? Now, I like to tell you all the time on the ARMR Report, Monday, Wednesday, Friday, about all the right things we're doing. Let me share right now a couple wrong things. I've been talking about the pipelines, AMLP. That thing just keeps going down. Do you think I still own it? I have stops. I don't know why it keeps going down. We can discuss that. I don't want to get that into it. This is for beginners. That's one of my favorite investment themes. With a 9.5%, 10% yield, the stock keeps going down. I can't just sit there in the stock and try to figure out why. I have to step back. I told you guys last week, there we are in precious metals, but we have stops. And I asked you during the week, is this going to work? Are these things going to break out or fail? Well, you have to know. I mean, they're failing, right? So you have to know I'm out. It doesn't matter what I believe. It only matters what I can prove by looking at my net worth. Okay? So, to wrap up, I just wanted to share with you the importance of stop losses to check your own emotions so you don't get carried away forcing your will on the market. Never do that. Accept your mistakes, accept them immediately. So what we have now in our portfolio, you all know we own, you don't know what we own, but I've been talking about Schlumberger or Invesco or Dow Chemical. Okay, great. These stocks are skyrocketing. We put them on at the same time, we put on, CEF. CEF hit the stop. It's out. These other stocks keep going up. So over time, I've got names in my portfolio with a cushion because the principal's gone up, and I'm collecting my dividend yield. And I'm admitting as soon as it happens, ideas that aren't working. I love a Charlotte's Web. Stock didn't work. I got out. Doesn't mean I don't love the company. Still use the products. Still love it. But I'm not going to hold the stock if it's going to plummet. Okay? Think about this. As I write algorithms, I'm going to leave you with this thought, statistically, so you really can understand and start grasping. Statistically speaking, as I write algorithms over the last decade plus, I'm going to tell you something right now. You can go research it. You'll find out. If you could write a trading system that makes money 3 out of 10 times, just 30% accurate, but you use the right stop discipline, you can eke out a tiny gain. Think about that. So what if we could just be right 50% of the time? We buy 10 stocks, 5 lose money, 5 make money. If our stops are right and we ride our winners, we increase net worth over time. And that's just being 50% accurate. We strive on the ARMR desk to be 70% accurate. But that means the 3 stocks are going to be out of our portfolio pretty quick. And that's the other thing. It takes a while for you to get the satisfaction of the 7 that make money or the 5 that make money. But you have to suffer the indignity of a loss immediately. Guys, I'm sorry. That's just how it works in the stock market. For beginners, I want to share this with you. This is how it works, guys. You're going to take your 10 positions. You're going to have to take your losses probably in the first week. And the gains take time to build up. So it's brutal for anybody who has an ego. Okay? Thanks for watching. Thanks for allowing me to share this with you. It really is cathartic for me. If you've enjoyed it, give me a thumbs up. It helps me out. And I look forward to talking to you guys again tomorrow, 11:30 for the weekend wrap-up. Take care, guys.